Hello, this is Steve Schwartz from Market Traders University, coming to you from the Market Traders virtual studios. Today we're going to focus on the energy markets, particularly energy stocks, one particularly in the ExxonMobil Corp. But before we do that, let's review some of the fundamental releases that have taken place over the last week and a half. The International Monetary Fund on July 8th basically released that there was going to be an expansion of 2.5% in global economy from the contracting 1.4% in 2009. That means a faster growth in the emerging markets and a recovery in the industrialized nations basically leads us to believe that we need to refocus on the energy market, simply because the energy market does become a cursor to follow on economic growth or recession. And if we're only 6 months away from the new year, it is now time to look. I don't know if we're going to see a major rebound in long-term bullish structure over the next 3 to 6 months, but I do know there's some short-term opportunities based upon what we find in the option source online trading room, which gives you great technical insight, market structures, advanced guidance systems to follow markets and give you signals, as well as good educational tutorials that enable you to understand many of the patterns that are identified in the analysis. So in a sense, when we look forward, the crude oil market could be averaging $85 a barrel, at least according to some pundits on Wall Street like Morgan Stanley. They're basically lifting their price from lower levels, or lifting their projections. Analysts are increasing their profits for 2010, especially in the ExxonMobil stock, simply because Exxon is certainly a stock that when it looks like it's going bullish, many companies overweight in that stock. So let's take a look at the technical structure of the market now that we've gotten some of the fundamental conditions out of the way and what we could be looking towards over the next 6 to 12 months. The short-term opportunity is certainly technically bullish. In our technical events insight section of optionsource.net, we have 3 different events that were triggered middle to late last week, all in the same day, which creates a very strong possibility of a continued move in the direction that we're projecting. First, on July 16th, there was a price crosses of the moving averages. So daily prices crossed the 21-day exponential moving average, and it signaled the first buy criteria. The second buy criteria was the MACD, that's the moving average convergence divergence. It has 2 specific moving average formulations and calculations that are designed to show a change in the trend in price just based upon moving averages, and certainly that has taken place. We've had a crossover here with the moving average convergence divergence. And the last one, which I love to focus on, and anybody watching my last video on the commodity index, power share index, is gaps. I love looking for gaps, and gaps tell me that the market has surprised the participants in the market. On a bullish gap, the market price has surprised bears, where in fact the market jumps is not expected the following day and never looks back. When I say never looks back, it doesn't look back, and you don't get an immediate back and fill. Ordinarily, a rule on a gap is that the market has to stay above that gap for 3 periods, or in this case 3 bars, 3 daily candlesticks in this case. And if it does not fill very soon, this gap's going to be left alone for a while, and these 3 criteria, the moving average, the MACD, and the fact that it gapped up last week, tell me that the market has a far more probability of going higher than turning back down, even though there is absolutely every reason to believe that we will see the market move and climb up to 71. It's good for a scalp, and then turn back down. This will become resistance, should turn back down, and somewhere along the line, for the long-term bullish technical structure, we should be testing 65 to maybe even a higher low established, creating some kind of long-term trend line. But for now, the fact that we've had 3 short-term indicators the crossing over the 21-day moving average, the cross through the MACD, and the gap leads us to believe we have short-term bullish opportunities. So for that, I'm going to wish you a happy trading day. May the best trades be yours today through next week and for the remainder of the year. Keep an eye on ExxonMobil and have yourself a great day.